Welcome to MFB TV on Wednesday the 13th of January. Now, before I talk about buy to let, which is obviously the hot topic of the day for many of our customers, a quick word for those of you who are developers. It seems bizarre that the Tories, having won a mandate at the general election in May, have yet to re-ratify the extension of permitted development rights. There is a rumour that the housing bill currently going through the House of Commons will include the extension clauses we've all been seeking, plus the extension of the property classes away from just office buildings that have long been discussed. It is almost inconceivable that Tories, given that Mr Cameron has gone public with his plans for the regeneration of council housing estates, would allow the budget to come round on March the 16th without having resolved this matter and affording the lacklustre opposition the chance to poke fun at them. So we are hopeful that announcements will be made in the next few weeks, so those of you with developments that are currently stalled, awaiting PDR decisions, can get on with your projects. Certainly, there is plenty of new funding available, and since I last spoke on the subject of development in the autumn, one new lender has joined the market, offering broadly similar terms to both Aldermore Bank and Secure Trust Bank, and there is now renewed appetite within the Royal Bank of Scotland Group. But now looking forward to buy to let in 2016. And our key message is to you that despite what is happening between now and the 1st of April and the stamp duty deadline for the surcharge of 3%, that buy to let stress tests will have to change for those of you who continue to own property in your own name. This will lead to a restriction on the amount of money that you'll be able to extract out of properties that you currently own. And it's quite clear that the government is intent on moving buy to let from an investment class operation to fully operating businesses. The majority of buy to let transactions, we therefore believe, will in the future be carried out in limited companies, and especially SPVs. There are a few lenders, including our own brand, that will do trading limited companies. So we are expecting Q1 to be extremely busy, and we do expect those lenders that don't currently offer buy to let in limited company products will change their stance and enter that market, but some of them won't be able to achieve that overnight. To give you guidance in this respect, we have already issued our limited company buy to let index as at the end of Q4 2015. And in it we note that whilst 15% of all our applications in October were limited company buy to let, that rose to 38% in December, and clearly in January, I can't yet give you a figure, but the telephone calls would suggest that that will rise to well over 50%. To support this, the number of products available to limited companies rose by over 50% in that period, and currently in the second half of the year, we were offering 147 products for limited companies across a range of 12 lenders. On our own Keystone branded product line in buy to let, we've set a deadline for prioritising applications received by the 29th of January who are seeking to achieve a completion either in their own name or limited company by the 1st of April, so as to avoid a 3% stamp duty surcharge. As of today, that leaves you only 78 days to get your transactions concluded, and that does also include the Easter bank holidays. So time is not on your side, or indeed our own, if we're going to assist you. Now, to give you guidance on all of this, First Rate, which is our quarterly newsletter, went live on the website yesterday. Just click on the front page and you'll be able to pick it up. And for those of you who would like a hard copy, who are not on our mailing list, just phone in and we'll be delighted to put one in the post to you. So here's to a successful 2016 for us all, and please do pick up the phone to us on 0845 345 6788 for all your inquiries.